Hi friends, good week. How are you today? We are now on the weekly review for the fourth, actually full week of June 6th of June 2011. Well, the last week was very nice week. On the live trading room we have had amazing moves um, and actually the market was very nice and provided very nice reliable moves. During Friday, I must admit that I was very surprised because the news from US sorry, about the unemployment rate and about the non-farm payrolls surprised me very much. First of all, because many less jobs were added to the job market, than expected. And despite of it, the US dollar continued to gather weakness. That little surprised me. The euro flight up, the British pound began to rising up, the Australian changed the direction while holding 106, and I must admit that I was a little surprised. I still not sure how to translate it, how to eat it. I guess that this week will be more clear for us, but I do have some interesting ideas for the upcoming week, and I would like to share you. So first of all, let's see the euro dollar. Let's begin with the euro dollar, the one that provided us this big up move. Pay attention, friends. This is one of my favorite situations, actually. Look on the slope of the MACD during the candles I am going forward with. Pay attention. You see? Look on the slope of the MACD, right? Rising up, and the RSI is rising up as well. The Bollinger Bands are being opened. The resistance line over 145 was broken, and this is actually the official confirmation for the up move. The investors are in, they're aiming 150 at least, and maybe even 155 on the next future. So it does look bullish for now. The new help program for Greece is about to be confirmed, and it gives actually very positive winds for the investors, and it looks like the euro is going up. So on the long term, I believe we are going up. If we take a look on the weekly chart, then the block I was talking about on the 20 moving average of the weekly chart actually happened and holded this pair. So it looks like we are going at least for the last high, right? Then, if the last high will be broken, then 150 will be the next target, and maybe, who knows, we are going all the way for the last resistance that still was never reached since 2008, around 153, and maybe then even higher. Who knows? It does look bullish now, and it does look bullish as long as we are going to have our next histogram divergent being created, right? Such is what on this case, as you can see just right here, right? So it's another rise up actually. Okay, so that's the expectations from for the euro long run. Of course, friends, because of the so many things happening just right now on the fundamental world, everything could happen, everything could change. But as for now, that's the expectations. If anything happen, of course, you will be updated during with the blog. So we have an up move on the long run. What about the short run? We could possibly have a retrace. 145 could be a forced stop. It could be even a little deeper for the previous divergence around 144.50, maybe even 143.50. Right? But stop has to be placed below this support area, the 20 moving average of the Bollinger Band, even below 142. That would be a possible stop. For the short term, once again, I do believe we will have corrections. First, we have a resistance just right here, as you can see. It was blocked just right here. We have a divergence on the histogram as well, right? We have our second cross up on the stochastic, and as you know, a correction begin with the this is what I mean, the second visit, second cross up. This was the fourth cross up of the 80, then down and cross again of the 80 level, and the retraces usually come after a second or third cross on the stochastic. Such it happened just right here, as you can see. You see, 1, 2, immediate on cross on the 80, right? And it crossed down, as it happened just right here. 1, 2, it crossed just right here down, then another up, and on the third it made the very change of direction. Such it happened just right here as well. You see, 1, 2, and whoop, correction. This correction actually was a sideways move, but it's still a correction. It happened just right here again. Okay, so you know actually my this, right, this is what I'm talking about. You know my actually stochastic thing. I always talk about it, but this is actually how it works. So this is about the euro dollar. Short term, I do expect the euro to correct. I would not be surprised even if we're going, as I said, on the previous levels, and maybe for the 4 hours uptrend line means we are going down from here. That's about the euro. It could be deeper correction, but long run we are still bullish. We have 147.50 as a resistance. We have 149 as a resistance, and we have 150 as very important psychological level. So I am bullish for the euro long run. I am bearish for a possible correction short term. What about the British pound against the US dollar? Well, this pair, to be honest, completely honest, surprised me a little bit, and let's see why. So first of all, friends, this is what happened during Friday. The current downtrend line that was bullish divergent with the MACD histogram and the MACD, just a second, and the stochastic moving average, sorry, was broken. Now it could be going and retested. It could be easily going and be retested. In this case, maybe even we will see some deep down move here for the support, and another low for a divergent being created. But I am also become bullish for the British pound. And I put it under some some question sign, because because of the fact that on a Thursday we will have interest rate in Europe and in England actually being released, and that could actually easily affect on the British pound. I am bullish, and let's speak about the bullish opportunities to join. On the daily chart, we have this downtrend line just right here. And these two, 1, 2, 3 spikes being created. This line is also confirmed as the RSI line, right? It could be happen. It could be broken easily. On the previous week, I told you I want to have a close above 165 to have a bullish confirmation. I still want to have this close above 165 just for possible bullish longer term move, right? So this would be conservative good entry. If you want to have an aggressive entry, then it looks fine already. The the downtrend line I was talking about during Friday, it was broken actually. Okay, it was broken actually, and any retrace down could be a good possibility to buy with a stop loss below the last low. This would be an aggressive entry. The target has to be placed once again at 167, the fourth, and the second could be open, because if the interest rate will be changed on Thursday, then the British pound will fly all the way up. So definitely a lot to expect for the British pound against the US dollar. That's my expectations, aggressive and conservative. By the way, if a conservative entry would take place, the correct stop has to be still below a 20 moving average of the Bollinger Band, but it could be complied and applied for 20 moving average of the 4-hour chart band, not the daily. What about the Australian dollar? Well, also a pair that surprised me a lot. That's completely honest, because I did see a down move here after this broken level, but it looked like the support, hold it. 105 hold it few times. Then we have a new support just right here, 106, also hold it during Friday. And we also have a resistance area, 107.50, just right this level. And we have still a bearish pressure down from the indicators. So everything actually could happen from here. Everything could happen from here. We could see another rise up from the Australian dollar, but it will happen if 107.50 will be actually broken and closed above on the daily chart. In this case, I call 110 as a target and a stop below 106. This is for the Australian dollar. By the way, on the weekly chart, we have a continuing divergence, which still was not completed totally, because the uptrend line was not broken yet, and it has to be broken for complete of the divergence. Still never happened, so we are still on 50-50 area. Then everything could actually happen from here. Let's go for the next interesting pair, and the next interesting pair from my point of view is Euro British Pound. Just erase this line. Euro British Pound. Well, during the last week, I was looking at this area 0884050 as a possible turnaround. First of all, because it was divergent already just right here. Everything looked possible, and we have had two crossed on the stochastic and a third, and a possible third, and double doji. Everything looked bearish, but Euro British Pound continued up. Let's have a look on the daily chart. The daily chart did the same situation as I love to see on the Bollinger and the RSI and the MACD. You see the slope? What does it mean? It means we're going up. A retrace could happen easily. 08850 could be the fourth target for retrace. Maybe then we will go deeper for 088, but it looks like the Euro British Pound is going up for 090 at least, this resistance area, at least. I would not be surprised if it would go to 091 and maybe even 092 and 093 every 100 pips, because it's Euro British Pound. It's very, very, very critical area, very, very critical areas. So it is, but the investors actually look to sell because it is overvalued from their point of view. So 090 is the first target, 091 the second, 092 the third, and I do see a big retrace for the Euro British Pound once it reached these levels. I am bullish yet with 090 as a fourth target. Stop has to be placed below 20 moving average of the Bollinger Band. Once again, long term I'm bullish, short term look for a retrace, and that's why we have divergence yet. We have the 1 hour critical divergence. It will happen. The correction will come. This is the last uptrend line being created, and the 20 moving average of the Bollinger Band. If it will be broken, then we will probably go for the next uptrend line, which is this deep line. So that's about the long term and the short term of the British pound. Then next interesting pairs to watch from my point of view are, and please write it down, British pound against the Aussie, still from the previous week. 105 has to be broken and closed above, so we have our rise up for 158. For the down move, I would like to have a close below 151. As long as it did not happen, we are neutral in between these areas. British pound against the New Zealandian dollar. It looks very good bullishing because there are bullish divergences on every chart, weekly and daily. But this resistance area, the 202, still hold it. It does look bullish. It does look very good with the SRS and with the opening Bollinger Bands already. Everything does look good, especially after this downtrend line was broken. And if the 202 will be broken up, we are going all the way to 203 as fourth target, 204 as second target, and the next target could be easily set on 209 as long as this level hold itself, this level, the two clear level, 2 figure. Right? This is the expectation from the British pound New Zealandian. From the New Zealandian itself, I prefer to stay away. It reached the historical high, you see, just right here, reached the 082, but the divergence is here on the weekly chart, on the daily chart. Everything is possible. I prefer to stay out for this pair. I would not be surprised if we will go down for 080 and maybe even lower for 078 on the deeper move. Everything possible here, and it could happen easily. The next interesting pair would be Swiss against the Japanese yen. It also is divergent between the highs and the RSI highs, and we are on our third stochastic cross. Double doji just right here, friends. Double doji. Breaking down of this double doji will take us down for 94, 94.40, 94 figure levels. Actually, a 20 moving average of the daily Bollinger Band. It does look bearish for the short term charts. How can we join it? How can we join it? A break below the last support area and possibly even the break below the Bollinger Bands up and Bollinger Bands down will take us for a good sell opportunity. That's all from the charts, friends. About the indices, well, what can we say? The weekly chart looks very, very, very bearish. But pay attention that we do have our uptrend line just right here. If this uptrend line will be broken, friends, we are going long-term down move. The divergent begin to take action. As I always said, divergences never lie. The same with the Dow, as you can see. It's just the same situation. So, if this uptrend line will be broken, expect a long-term down move. This is for the indices. By the way, I missed Aussie Canadian. We were talking about this downtrend line previous week. This downtrend line still never was broken. So, wow, crazy pair. It's really crazy pair. A possible move for 0.99 and parity levels is still very, very, very possible. but I still want to have a close above this level. This is what happened during Friday, by the way. Crazy pair. Stay out of it as long as this uptrend line hold it, right? And that's all, actually, friends. Now, interesting thing to show is the US dollar index, because watch the Bollinger Bands of the US dollar index also open down with the slope as I like to see, and it could take us for the last low once again. So it's very interesting situation. By the way, on the monthly chart, 174 level was holded, and still could take us for the 71 and maybe even for new lows. So friends, thank you very much for watching this video. I wish you fantastic, profitable, interesting week. Your friend Vladimir.